Well, welcome back to Up to Speed. We have got such a great series of conversations over the next few weeks that we are working together with the American Agents Alliance to bring to you the Commissioner's Chair, a discussion with all of the different candidates out there for the California Department of Insurance Commissioner. Over the next few weeks, we will get to know them and get to know, what they're all about and what they stand for, and really bringing the information to the insurance agents and the overall public, because this is a voting matter that comes up just around the corner. I believe primaries are in June, and then the big election down in November. So I would like to welcome my counterpart, Daniel Groff, today. How are you, my friend?
I am good. Thanks for having me here today.
Yes, and he is with the American Agents Alliance. He is the chairperson and also president of the organization. And then today we're going to be talking to Mr. Patrick Wolff. How are you, my friend?
I'm very good. Thank you for having me.
It's not every day we started off this conversation that we get to talk to a grandmaster, which we'll get into in a minute.
That's true. Those many years ago, but yes.
But then also, indeed, somebody that's really interested in the insurance industry on a higher level and is running for the Department of Insurance Commissioner. So welcome, welcome, welcome. How are you?
I'm very good. How are
I
you?
love it. I love it. Well, we're just going to jump right into it. So we've got a lot of different questions. We're going to talk about a little bit of the qualifications and your motivation. We're going to dig into the market availability and, the overall crisis that we hear about in California. Of course, we'll be talking about that Prop 103, the independent agent channel, the wildfire, the mitigation, and the consumer protection. And of course, just kind of closing with your overall, last final words of things that you can get out there to the constituents. So with that, I would like to start with understanding a little bit about you and, what you're bringing to the table here and your motivation for running for office. Because, you think about politics sometimes and you're like, I don't know. That sounds scary to me. But let's talk about a little bit about what you've actually built and reformed and delivered in your career that has kind of gotten you to this place of deciding to run for this office.
Okay, great. Well, thank you very much. So I graduated from college in 1997. I took a few extra years because I did play chess very seriously when I was in my teens and 20s. But I graduated from college in 1997 from Harvard, and I began my career in business. And after spending a couple of years, I worked at a management consulting firm. I worked at a dot-com startup in Silicon Valley, which is where I met my wife, by the way. From 2001 to 2005, I spent 4 years working at a major bank at Capital One. And my job there was to build an auto and home insurance brokerage business. So I spent 4 years where we partnered with a couple different companies, did built a nationwide platform. It was like a dozen different insurance companies, selling in pretty much every state, I think. There may have been one or two we didn't cover. And then we ended up making an acquisition and getting that business up and running. And that was my job, to run that, to build that, to run that. I left in 2005. Sadly, Capital One did sell the business after I left, so it's not there anymore. But I got 4 years of hands-on experience really working with customers and carriers and getting to know how the industry operates. I moved into finance, and I spent the last 20 years working in finance as a financial analyst and investor, primarily in the public markets. Certainly not only insurance, but I have a lot of experience analyzing insurance companies and insurance markets. And so that's really what I bring to this race. And it's the reason why I became very interested in the insurance commissioner race. Now, about 9 years ago, I stepped back from investing and working for other people and primarily worked for myself, again, as an analyst and investor, but got much more involved in state and local politics as an advocate, as a volunteer, supporter. Never ran for elected office, but was very, very engaged on several different things. And so I was already in a space where I've been very involved in public service and politics, and particularly Democratic politics in California and San Francisco, where I live. And then last year, with the terrible fires in Los Angeles, because of my background, I was really drawn to it to try to understand what was going on from an insurance perspective. And to be perfectly honest, I'd never really done a deep dive into insurance in California before. And what I found was kind of fascinating and horrifying, because I think insurance regulation has been screwed up in California for a long time. We have, as I'm sure your viewers are aware, a market in California that really has a lot of problems because of poor regulation. And I came to understand that and spent 6 months, the first half of 2025, really deeply studying it, studying the situation, studying the role of insurance commissioner, and really coming to understand that there is a tremendous opportunity to serve here. And also that I think that this is a year where it might be possible for an outsider like myself to run and to win. And so after spending some time really sort of looking at it, talking to a lot of people, really thinking it through, I decided to jump in. And so that is why I'm running for California Insurance Commissioner. Just one or two quick things as I wrap up sort of my reason why. First is from a personal perspective, this just turns out to be a great time. Our son's in college, our daughter's in high school, she's about to go to college. My wife is super supportive. This is like if I'm ever going to like take on a big, massive, meaningful project, now is the time. So I'm super excited from that perspective. And then also, I'm not doing this to launch a political career. And I feel it's really important to make that clear. I would consider it the honor of my lifetime if I'm able to serve and really, really do a great job for the people of California. But I have absolutely no ambition of running for anything else. I'm not doing this because I want to run for governor or senator or Congress or anything like that. And I've said publicly, if I'm elected insurance commissioner, I'm not going to run for any other elected office. I'm 100% focused on doing the job. I'm not taking any money from insurance companies. I won't accept any corporate gifts while in office. I know our current insurance commissioner has gotten a bit of a reputation in that area. I feel it's really important to make that clear. I'm doing this because I think this is a job that's really important. I think I bring a knowledge and skill and experience base that's really valuable and important to this role. I think we need to stop electing politicians for a job that really requires someone who knows how insurance operates. And I'm incredibly excited at the opportunity to serve for the people of California.
I like it. Great intro. So now we're going to set the table for the chat, right? And I love this quote. I saw this somewhere online and I pulled it up for our chat today. It says, California isn't just a state market, it's a pressure valve for the entire US insurance system. It drives premium, tests risk tolerance, and sets the regulatory tone. When California moves, the country recalibrates, right? And I really like that. And so with that, let's dive into, some of this market availability and a little bit of our affordability crisis, because I could tell you from sitting in the sales side of an independent agent, what I deal with. And then, also from a person who I live up in Marin County. So I also get to experience the lovely rates of insurance and where we're at. So, 7 out of the top 12 California homeowners carriers have reduced coverage or absolutely stopped writing coverage, right, since 22. And, many of our property owners, rental property owners, are now depending on the surplus lines market.
Yep.
What do you say, and how do you ensure or help to ensure that these surplus lines carriers and these admitted carriers can really kind of coexist and really, have a better overall experience when it comes to the insurance, sale and the product market that's available? What do you say to that?
Well, I guess I would flip that around a little bit from the perspective that, like, we regulate insurance markets for the benefit of the customer, right? So obviously, I think the non-admitted and the admitted markets need to coexist together. But my concern, I think the focus of any insurance commissioner needs to be what's working for the customer. Now, the problem is the market's not working for the customer. Because as you said, the availability is a serious problem. And we should get into the underlying causes of that and the history of that and what needs to change. I think some of the changes that need to happen are happening. And I think a lot more needs to be done in that regard. But as I see it, the fundamental problem for the customer is that we have had so many of the admitted carriers withdraw from California, essentially voting with their feet, saying that they can't do business in the state of California. And the way I envision regulating the markets is to make it much easier for insurance companies to come and do business in California, and at the same time to have really smart, strong regulation of market conduct. And one of my themes in my campaigning is, paradoxically, California has been actually, I think, too lax in market conduct regulation in some ways, or let's maybe say more ineffective, but overly restrictive in market access. And we really need to flip that script. Customers benefit when we have lots and lots of choice and competition. Customers benefit when you, Samantha, are able to go and get quotes from lots of different insurance companies, present those quotes to your clients. They're able to get the benefit of competition on product and price. And at the same time, we have smart and strong regulation that empowers customers and holds insurance companies accountable.
So one of the big issues we have is the rates, right? That's like the big thing that we talk about a lot. And on average, it takes about 300 days for rate approvals to go through or not go through or just kind of go through their process. The national average we know to be about 60 days. So
Yep.
what do you say about fixing that process? If elected, where would you kind of put some focus in there? Because I think that's a lot of the problem.
So first of all, you put your finger on it, and that is one of my absolute number one priorities, right there, right? We absolutely need to fix it. So now let's get into sort of a little bit of the wonky weeds. So as I'm sure your viewers know, Proposition 103 created the regulatory structure in California and created this intervenor process, which is unique to California, right? So California is a prior approval state, and many other states are prior approval. But what's different about California, it's not just prior approval, it's prior approval with the right of outside parties, of interveners to challenge. Okay, so far so good. Now, if you actually read Proposition 103, it's very clear from the way Prop 103 was written, it was intended, at least on the face of it, that most filings would be approved within 60 days. It's interesting, actually, in Prop 103 is the same number, 60, that it is supposed to be approved within 60 days, that only special cases are really required to have stricter review. And then later on by statute, that is by the legislature, was added some language about cases in which it should take 120 or it should be approved within 120 or within 180 days. Okay. I think what has happened over some years is the process partly by how the regulations have been interpreted. And by the way, there's just been a new sort of set of regulations, literally a couple days ago, out of the Department of Insurance that's modernizing, streamlining, changing, whatever verb you want to use there, some of those regulations. Some of it's by regulation, but some of it's just, I think, administrative process. There's the way in which the Department of Insurance has been doing business, where they've been taking much longer for these reviews. They've been requiring insurance companies to waive the provision of when filings are supposed to be reviewed. That's called, quote unquote, waiving the deemer. And as a condition for coming to market, which is not necessary. There's a GAO report that was published a little while ago that goes into exactly what you were saying, Samantha, with the same sort of day frames that you were using. And they talk about in that report how in California, in contrast to other states, objections are they come one at a time, as opposed to all being presented, batched together and presented to insurance companies, which greatly elongates the process. There's a whole set of things that have happened over the years to lengthen that process. And I think part of the reason why that's been allowed to happen is just kind of, for lack of a better term, kind of administrative laziness, as it were, like just not having enough of a focus on the value of doing things more quickly. Some of it has been the way the regulations have been interpreted, but some of it also, I think, has been kind of a mindset or a culture in the Department of Insurance of thinking that the most important thing is for every filing to get strict review, regardless of how long it takes, because the strict review is more important than having a healthy market with lots of insurance companies competing. And this is a case where I really want to flip the script. Right? Where I think it's really important to reserve strict review for cases that really need it. But most of the time, the department should be providing a clear set of conditions. All right, if you do this and this and this, we'll review it. We'll send all the objections together, or things that we want you to respond to. The insurance companies can respond to that. And there should just be a priority to get these things reviewed in a timely manner. Again, I want to emphasize, totally in accordance with the spirit and the law of Proposition 103, because it's incredibly important for insurance companies to be able to come to market quickly. The more quickly they're able to come to market, the more certainty they can have that they'll be able to come to market quickly. We'll get more companies competing. We'll get competitive product and pricing coming to market more quickly, and the customer will benefit. And I want to end. I know it's a lengthy answer, but I want to answer. I want to end my answer on this. It benefits the customer, which is always the focus of regulation. So Yeah, totally agree with you. And hopefully, as you can tell from my answer, I think there's a lot of levers we can pull to really streamline that process.
Which is a perfect segue to our next focus point, which is Prop 103.
So thank you for that. Prop 103, it was passed by the voters in 1988. That framework was set up, 4 decades ago, basically. The prior approval rate, we've seen it take years with some carriers. And the problem we also noticed was if they asked for more than a 6.9% rate increase, that's when they were really pushed to the intervener program.
Yep.
And with that happening, carriers were scared to go over the 6.9 when they truly needed an 18, a 20, or you looked at some periods that some were at 25% because the cost of vehicles went up, the claims went up, things like that. And so we were seeing clients that were getting a 6.9, then they immediately file for another one and another one and another one. So to try and avoid that process. With all that said, after the 4 decades, which elements of the framework do you believe that still serve the consumer well? And which do you believe updating those is a reality for the current market?
Okay, well, that's a pretty open-ended question. So let me focus in on one thing, which is kind of reiterating a point I made in my last answer. You made a really important point, which is that the intervener process, the carriers ended up being afraid of tripping that intervener process, which led to a sort of distortion in how filings were submitted. I view the intervener process as a potentially valuable additional check if used responsibly and skillfully. But I think it's really important that the Department of Insurance not adopt the attitude of we want to try to push the price as low as possible in every case, but rather adopt the attitude we want to have a really healthy, competitive market and make sure that filings are proper. And if they are asking for a higher than that threshold increase, that we have confidence that nothing bad is happening. And the flip here is instead of the regulator trying to hold down the price as much as possible, what the regulator is doing is trying to foster as competitive a market as possible. And then again, emphasizing the market conduct regulation to make sure that customers are empowered, which I want to talk about because that's a very important, it goes hand in glove. Customers are empowered and insurance companies are never acting badly, or if they are, they're held to account to it. It's a very important flip because exactly what you were saying. Otherwise, you get the situation where you build up these distortions in the market over time. You get a less healthy market. And again, ultimately, it's the customer who suffers from it.
Yeah, I mean, competition's good, as you mentioned a few times. More carriers in the marketplace, I think, bring down the price in a lot of ways. Because right now, we're looking at situations where we're quoting somebody, 15 different carriers for their home, 20 different carriers. We're into the non-admitted marketplace, and there's only one carrier, and they have no choice.
Yep.
Where
100%. And let me add something to that. I totally agree with what you just said. But oftentimes when people talk about this, they focus too much on the average price. But I saw this from running, and obviously you both understand this very well. I saw this from running a brokerage. If you have a lot of quotes, one or two carriers may end up quoting very differently. So it's not just the average price, it's that the customer can get the best price by having lots of different carriers competing for their business. And by having lots of different carriers competing, now they have to compete not just on price, but on ways finding ways to reduce the risk. So like carrier number 4 or 5 or 6 may say, hey, if you do these things, we can, and you verify you've done these things, we can actually quote you substantially lower price because you've reduced the risk. And California has lacked the value of that competition for so long. And again, so important to emphasize the market conduct regulation, which is super important. That goes hand in glove with robust competition. But I really do think it's this flip it's this different orientation that's necessary, which we're beginning to get. And there's a lot more that needs to be done. And enormous value can be brought to California customers if we do this.
So on that note, and we'll get on to that, but I want to point out some carriers we've been talking. I know Samantha knows about it as well. There's more of a chance of you having a flood in your house than having a house fire from a wildfire. I've talked to carriers for years now about systems like the Mow and Flow, the Flume system, and others that monitor water leak detection and can turn the water off. And when I talk to carriers, like, oh, that's another filing. I have to start all over the filing. I've already got this filing. That's the thing on the speed to market. Those
Right.
kind of things, and you should be able to get a discount on your home for doing these things. You're proactively trying to stop a future claim. Or I've talked to other ones that are like, I'm like, why does your deductible only cap out at $10,000? It's another filing. I have to start this whole process with a DOI where I have clients that are like, I'll rather go uninsured. I'm like, no, take a higher deductible. But some carriers, you can't get much higher than a $10,000 deductible. Where I have clients that'll take, give me a 25, give me a 50. I'd rather have that and have good coverage and think that's where I'm going to be protected. So
And
on
this,
that one there,
I love this example, and it really highlights something important, which is when you don't have a healthy competitive market, people don't know what they're missing. They don't see these things like what you just described. But that's the value of having robust competition. As a regulator, as a future regulator, I have no interest in a market where a small number of companies end up having a chokehold, right? And you don't have lots of companies fighting for your business. I want lots of companies fighting for customers' business, and I want smart, strong regulation that regulates the market conduct so that customers are empowered.
Well, and I
That's
think that
how the market.
customers have such a bad taste in their mouth, from, they weren't paying enough to begin with. Then they are starting to pay more of what market they should be, and then they're angry. Or then when they need the insurance companies to perform, guess what?
exactly.
They're not performing in the way that we all thought they would
Bingo,
be.
bingo.
And then they're out of here like, hey, you guys, we're not going to be here anymore. And so people are just like the consumer is over it. And then we're here on the agent side trying to like, every conversation we joke around in the office, they're not great conversations like they used to be.
No.
And that's not
I
fun
mean,
or fair.
and Samantha, I know you've been in the industry a long time like I have. We've seen some carriers come in really hot and fast, and then they leave, and then they're back. And that's not good for us as well. So it is that balancing act. And that's what the insurance commissioner, and I agree with what you said earlier, insurance commissioners should know about insurance. We've had too many insurance commissioners over the years. This was a stepping stone to get to the attorney general, lieutenant governor, or governor. That's what they never understood insurance. Some of them I even wonder if they ever had insurance or knew what a policy was because of some of the things they were talking about.
Listen,
But on the prop,
this is totally my top two Democrat competitors have no insurance experience whatsoever. This is just a fact. And our current insurance commissioner, of course, now he's been in the office 7 years, but when he ran, Ricardo Lar, no insurance experience. This is
exactly.
nuts. This is nuts. And that is why I'm running. The people deserve to have an insurance commissioner who knows how insurance operates, has real experience.
Yeah, I mean, and I know when our current insurance commissioner got elected, a lot of his podcast stuff that he was doing in his team meetings, and he'd invite agents to be on it, and I know we would all look at each other going, "What did he just say? What was he thinking on that one?" But so we'll go back to Prop 103 again on another one here. So under Prop 103, the intervener provisions, outside parties, mostly prominently consumer watchdog, can participate in the rate proceedings and recovery fee for the participation with Consumer Watchdog alone having been awarded more than $18 million in intervener fees since 2003. Supporters argue this creates a consumer check on insurance rate filings. Critics argue it slows rate review, increases litigation. Cost of this is passed on to the policyholders and functions as a subsidy to a small number of participating groups. What is your view on the intervener process as it currently operates, and would you seek any changes on how that functions or how fees are awarded?
Well, I'll start by saying that the Department of Insurance, we're recording this on Tuesday, right? April 21st. And
Yep.
yesterday is Monday, April 20th. And literally yesterday, Monday, April 20th, the Department of Insurance just released a whole new set of regulations, changed regulations around the intervener process. I read the press release. I took a quick look. It's all very legalese. I have not had time to dive into the 100 pages or so of documents around that. So I think like the dust will settle from that as those changes are implemented, and I think we'll get to see what those changes really are and how those changes serve the process. I will go back to saying what I said earlier, which is I think used skillfully, the intervener process can be a valuable additional power of the Department of Insurance, but it needs to be used skillfully. And I do think that, again, this is what I was saying earlier, the process is counterproductive for customers. From what I have heard, there's a lot of objections that are logged that don't seem to be providing truly making a substantial contribution to the process. That the elongation, the enormous elongation of the process is itself very harmful for customers. Like you were describing earlier, insurance companies literally not bringing new product to market or not really operating nearly as quickly or nimbly as they could because of the process. So I do think, and I've been very clear about this, I do think we need to streamline the process. I do think we need to take a look at it. I don't have a point of view on individual actors. I just think that the process as a whole has not really been working for the customer and needs to be changed.
Okay, so then we'll move on from that one. And I appreciate your input on that. Until recently, California was the only state that did not allow insurers to use forward-looking catastrophe models
Yeah.
or to factor in the cost of reinsurance into rate filings, both of which are standard practice in the other 49 states, and both of which are central to the current sustainable insurance strategy reforms. Some of these limitations flow from Prop 103 itself, others from decades of regulatory interpretation. Do you believe California's current rate-making rules reflect the risk environment insurers actually face? If not, what would you change and through what mechanism? Regulation, legislation, or a ballot measure?
Okay, so first of all, I would focus on regulation because that's the job I'm running for. And then, once I'm insurance commissioner, I'll have a better sense of what might require working with the legislation, which is with the legislature, which is obviously an important part of the role. Ballot measure, at this point, I have no point of view of anything that would require a ballot measure. I reserve the right to just, learn from being in the job and see whether there is anything that really does need to go to the people. Your question asks whether now the way in which carriers are allowed to underwrite properly reflects risk. Certainly beforehand, it did not. Like, it was madness that we were not allowing forward-looking models. It was madness that we were not allowing carriers to count the cost of reinsurance in their allowable rate of return. So,
especially at the rate of reinsurance increases over the years.
Sure,
I mean,
and
that's
because obviously, for anybody who understands insurance, reinsurance is a necessary, essential component of insurance companies' operations.
it's the cost of doing business. It's like
Yeah,
any business. It'd be like me buying reams of paper for my copier. It's a cost to do business in my industry.
Yeah, it's not only a cost to do business, it increases capacity substantially.
Right.
And it's a cost. So, okay. All right. So we all agree on that. I think I have some issues with the specific way the sustainable insurance strategy has been implemented. So to take an important case in point, excuse me, there's this set of regulations promulgated recently about for every 100% market share that you have in sort of non-risky areas, you have to write 85% business in risky areas. And then what constitutes being risky is if you're underwriting a home that is basically in a zip code on a list of risky zip codes, right? But the basic problem with this, and there's a story in the New York Times from November of 2025 that I'm sure you're familiar with that goes into this in great detail. The basic problem with this is just because you're in a home in a particular zip code does not necessarily mean that you're risky from the point of view of the actual models that the insurance companies are underwriting with. And so what we have is a regulation that's meant to require insurance companies to write business in certain amounts, but ends up being a distortion that some insurance companies are actually able to take advantage of. They're cherry picking safe homes and leaving risky homes, and they're getting higher rate for underwriting safe homes. And that's a distortion, again, that does not help customers. So I think we're making progress. I think there's a lot more that needs to be done. In general, I prefer less regulation rather than more when it comes to underwriting. And where I much prefer, again, I've said this several times, where I much prefer the regulation is in the market conduct, right? In terms of coverage terms, in terms of transparency, and also in terms of claims. One of the things I want to do is I want to make public the information that's collected each year in these market conduct annual statements and provide a report card on every single insurance company for how they handle claims. So that, this is a case where I think the Department of Insurance can substantially improve the market operations by putting into the market this information that it has that other people don't, that customers really benefit from, so that you align incentives, so that good actors are rewarded for acting well and bad actors are punished for acting badly. So, the devil's always in the details. We could talk about this for ages. I think there's a lot that needs to be done to make things better. But I certainly believe allowing the use of forward-looking models, allowing to count the cost of reinsurance and the allowable rate of return, of course, those were necessary reforms, and thank goodness that we've made them.
Kind of crazy
And
that
it's funny
California is the only one that's not like, come on, guys, we're supposed to be the leader here. What are we doing?
Yeah.
Yeah. Well, I mean,
Well,
I think
there's other categories in that too. Like I mean, I write in 28 states. Every other state I write in, credit rating is a huge factor, and every carrier you talk to in every state will tell you that is the most justifiable way to one of the ways to verify a risk. It's not how far they drive to work, it's not how many miles they drive a day, it's not even to where they live. It's really the type of person, how they're going to turn in claims as on credit score.
Let me say two different things in this. The first is I want to just interject a thought from a minute ago, which is
Okay.
the fact that California is so backwards and so dysfunctional, again, I think is a...
You said it, not us.
I'm talking about insurance regulation. I love California, and California is in many ways the leading state in the country, and it's just an extraordinary place, which is why it's so frustrating that our insurance regulation is so screwed up. And the reason our insurance regulation is so screwed up is we keep electing politicians who know nothing about insurance and treat it as a stepping stone. And that's why
100%.
Now, to the point that you were making about credit score, I will say this. I am very aware that credit score is highly predictive of risk in auto. I also do understand the concerns that people have around the use of credit score. I have, and it's not part of my platform to introduce credit score in California. I'm not interested in pursuing that. And the reason I'm not interested in pursuing that is I think there's something better we can pursue, which is the use of telematics. Now, there's very important privacy concerns around telematics. And it's absolutely essential that we get those privacy considerations right. There are some states that move more quickly on telematics that have had problems around privacy. I think customers need to own their data. I think the data needs to be anonymized as much as possible, allowing the insurance companies to underwrite, but taking out anything that's individually identifiable. I think insurance companies need to be strictly prohibited from sharing credit data, privacy data, the data they collect on individuals need to be strictly prohibited on sharing or selling that in any way. There may need to be a provision to sort of archive and destroy over some period of time after some, depending on like if that can be done without harming the underwriting, right? So it's very, very important to get the privacy things right. But if we get the privacy right, this is a case where we can put technology to use to measure actual real driving behavior and 100% consistent with Proposition 103. Because Proposition 103, as I'm sure you both know, lists in strict order the items you're supposed to use to underwrite auto insurance. Driving safety behavior, number 1, number of miles driven, number 2, number of years driven, number 3, and then number 4 is any other elements that the insurance commissioner may deem appropriate, right? Well, and again, I'm not interested in pursuing credit score. If credit score were to be included, it would have to be number 4. But driving safety behavior, number 1, that's what telematics is measuring. Wholly consistent with Proposition 103. It's measuring what you're really doing. And if we get the privacy right, which is very important, but if we get the privacy right, we can have lower cost, we can have more accurate underwriting, we can have the positive benefit of that feedback loop you get from getting feedback on how you're driving, so you actually get safer driving. We can collect data, so if the individual owns that driving behavior data, and if you're pulled over for driving in some biased way, if you're black or if you're otherwise targeted or unfairly pulled over by police, you have that data that's yours that you and only you can bring to bear in your defense. There's enormous benefits if we get this right. And I think that's something, it's obviously there's some of the other things we're talking about a little bit higher up in the priority list, but I think this is a real opportunity for California.
And I agree because almost every new car has a black box in it. I think any car built after 2021 has a black box that's monitoring data. And I drive a Tesla. I don't know if you guys have driven one, but I can see where my car is running. I can see how fast it's going from an app. So if my daughter's even driving my car, I can monitor what she's doing. And so the data is there. It's just how is it used? How is it kept private enough? But I agree. I mean, when clients that I have in the Mercury Go app or the Progressive Drive app or something like that in other states, when their rate changes, I can go to that and say, this is why. They took the data from this.
Yeah.
You were
exactly.
you were
And
driving too fast. You were swerving.
I want to be super clear. People are right to be concerned about privacy. It's super important. We have to take it very seriously. We have to get it right. But if we get it right, there's a lot of opportunity here to use technology to get more fair, better, cheaper insurance coverage for people with positive social benefits. It could be a real win-win-win.
So I'll move on to another one, and then Samantha's going to go with a couple. So California currently has the highest FAIR Plan enrollment, the longest rate review timelines, the most significant non-renewal activity in the country for personal lines insurance. Reasonable people disagree. How much of that is attributed to Prop 103 and how much is wildfire risk and how much is regulatory choices within the existing framework? In your analysis, because you're the data guy, and I know that because I looked at your bio, I went to your Facebook page and your website and read all about you. In your analysis, what share of the current crisis traces back to the Prop 103 original framework itself versus what has been administered? And I know we talked about that. And what does that analyst imply about the approach to be elected? Approach if elected? How are you going to fix it?
Well, I mean, the way I think about it, I think I've made this clear from my earlier answers. I'm not running to make any changes to Proposition 103. I spent my time studying the current regulatory structure. I firmly believe we can make the current regulatory structure work. I really believe that the problems that we've had are because the way that the current regulatory structure has been administered over time. Proposition 103 creates a very powerful regulatory structure, but that power can be used beneficially, but it can also be misused. And I think the problem is it's been misused.
Yeah.
And the other thing you said, by the way, is how much of this is due to climate change and the stresses from climate change. Look, climate change is stressing everybody. There's no question about it, right? Like, we all have to respond to the reality of climate change. Our insurance markets need to be part of that response. In a more perfect world, we would go back 40 years. We would put in place much better policy to stop the putting all the carbon into the atmosphere, right? But we can't do that. We have to navigate the world that we're in. So I don't even think it's useful to blame climate change. Obviously, we need to pursue all responsible strategies, policies very aggressively to slow, stop, and ultimately to reverse the harmful effects of climate change. But we have to operate in the world we're in. We absolutely can operate in the world we're in. There's a lot we can do to incentivize the right behavior. There's a lot we can do to make investments, to make things better. And it's just a question of using the regulatory system that we have effectively. That's the way forward for us, and we absolutely can do it.
And I know on your website page, real quick, Samantha, you brought up, talking about, and I go back in time, I'll go back 40 years, 50 years. I used to go to Big Bear a lot when I was a kid, and we'd go up in the summer and we'd pick up all the down trees that were on the property and you would cut them up for firewood for the winter. And then now you can't do that. And they're not allowed to do controlled burns. And, up until the Thomas fire, so that was 6 years ago, Ventura County, that's where I'm at, had never lost a home to a wildfire in a residential neighborhood because they would let the burn go. They would hold at a fire line at the property lines for the county where we're starting to get there, and they would stop the fires. That stopped. And when that stopped, we have this issue now where the growth gets so thick and so undergrown, and to protect certain things, that it's led to some of these devastating fires. And my fear is, and I know Samantha was at the last meeting we had, and California Fair Plan was speaking, they have billions and billions of dollars in a very small footprint. If there's a fire in Big Bear, Arrowhead, and I think it's Ridgecrest, all up in that area up there, if that caught on fire, there's really no way to stop it. And that's my concern is, we talk about the rates all day long. We can talk about how, the insurance commissioner would never let forward modeling come into play when the insurance carriers were all talking about that. No, you can only use the past, you can only use the past, you can only use the past. Then the Thomas fire comes in and we lose 750 homes in a night in Ventura County. Never had happened before. And then they're like, okay, we're going to use the past. And the insurance commissioner like, no, we got to look at the future now because that's already burned and done. It's that what's best for the insurance commissioner, it seemed like at that time. And again, it gets into politics. I do like the fact that you say this is what you want to do and you have no future aspiration in politics. I've been on city council. I've run for a spot. I've won a spot. Best of luck for you. I know it's a job and bless your wife and your kids because I know what I put my kids and my family through, my wife on that as well. That's what I see on my side as the independent person is it's not always what's best for they think they're trying to make what's best for the consumer and it's turning around and it's affecting the consumer in the long run. Like the intervener fees. Yes, it goes there and they say, no, we're not going to let the rate, but who ends up paying for that in the long run? The consumer does because it's passed on to the consumer. And like right now I'm showing policies decline. They're like, what's this $17 down here? Oh, that's the money they're going to recoup from, being a part of the California Fair Plan to pay the bill they had to pay. I have to explain these things where I wish I didn't have to. And I know Samantha wishes she didn't, and the thousands of agents that we represent.
Yeah, absolutely. And I mean, just to pick up on one of the points that you made, look, when catastrophic wildfire happened and people lose their homes or God forbid their lives, right? The first tragedy is the fire, right? Now, the insurance then that then has effects on the insurance markets. We have to all agree that we need to follow smart, effective policy that reduces the risk as much as possible for people and property. And you're absolutely right. We've not been doing enough responsible controlled burns. We've not been clearing out the underbrush responsibly. I always like to say, like, I focus more on the fuel than the spark because the spark matters too, right? Like clearly the power companies need to invest in their transmission lines and, to upgrade that and make sure that, you don't have something that can sway in the wind and spark or maybe underground them if necessary. But the science tells us that you can never fully control the spark. Something will spark. What you can do is control the fuel. And the people, the people who lived in these lands before us understood that in a way that we didn't for a long time. We now do understand, right? All through the 20th century, we didn't understand this, but we now do understand this. And climate change, of course, is intensifying the need to address this. And so one of the things that I'm committed to as insurance commissioner, obviously as insurance commissioner, if I'm elected insurance commissioner, I will not have fire people or helicopters or trucks or like that, right? That's not under the responsibility of the insurance commissioner. But if you make the insurance market work effectively and efficiently and fairly, and people see that, you gain the credibility to then go to the other stakeholders and say, we have to step up. California's way behind in the controlled burns and other responsible land management policies it needs to engage in. It's not just the state government, it's the federal government too, right? So it's complicated. This is going to be a multi-year process, but we absolutely have to do this. Doing this effectively will reduce the risk of the peril, right? Which of course will reduce the cost of insurance. But even more importantly, means there'll be fewer catastrophic wildfires. I mean, the insurance is what you do when something bad happens. The first thing you want to do is reduce the likelihood of something bad happening as much as possible.
But even like going into the behavior of the consumer, going back to my first original comment that, the consumer is pissed, right? They're not happy. If you were to go to an insured and say, hey, Daniel, if you were to do X, Y, and Z and clear your brush and, maybe plant these plants or do these different things, then we as the insurance company, we're willing to offer discounts. We're willing to offer market access that would not normally be accessible. And that's, I think for us in the independent agent seat, we're really looking on the carriers to go, guys, what are the incentives that we can all get everybody to work together? Because, a more, fire safe home in neighborhood is a benefit to everybody from not only like the ground level, but from the firefighter level and the government services level. I mean, what do you say to that? And how could you implement that as one of your,
So
focus
this is a
points?
really important point, and one of the things that I believe is necessary, as that I intend to do as insurance commissioner, is to set the mandate for insurance companies in a different way that better aligns incentives. So let me explain. Currently, the Department of Insurance has a program called Safer from Wildfires, and the Safer from Wildfire program provides guidance to homeowners and then mandates that insurance companies provide discounts if people take certain actions. Now, the first problem with the way the program is set up is the insurance company has to provide a discount for each individual action, whereas the science actually says you have to take them all together. And just doing a single action doesn't really increase the safety. And so that what ends up happening is the insurance company offers a token discount. So that's obviously just a stupid disconnect. But the second issue is that the actual guidance that's provided is not necessarily provided that completely aligns with the standards, right? And so there needs to be better alliance. There needs to be better alignment with the standards, and also the guidance the discount should be provided in some kind of tiers, so that if you're taking bundles of action rather than individual action. So all of this actually I agree with and has been pointed out in a report that was recently produced called SB 254, which was a report provided by the state government basically 2 weeks ago around wildfire safety. But I want to go further. I want to really reorient the way the mandate is provided. I think what the insurance commissioner, Department of Insurance, should do is mandate to insurance companies that when you enter into California, you must tell us what you will reward, what guidance people can take to reduce risk in their home, and what you will reward through meaningful discounts. We're not going to tell you what those actions are. We're going to tell you that you have to tell us what those actions are. Now, some insurance companies may provide pretty weak tea. They may provide something that doesn't really do much. But that means other insurance companies now have an opportunity by providing much more robust guidance with much greater discounts to take that business away. So I think that by setting the mandate in that way, it becomes much more pro-competitive. You make the insurance companies compete. You don't tell them what they have to compete on, but you make them compete. And then the ones that do a better job will end up winning in the marketplace and getting that business.
Well, and I think the consumers, nobody wants their house to burn down, right? Everybody's interested in having a lower rate and being in a safe environment. So I think the win-win by everybody is something that is an easy attain. I just don't know why we haven't thought that through or gotten there. And I'm hoping perhaps, the next office candidate here can make that happen. So now I want to flip the script. We've got just about 10
Samantha, on that real quick.
Yeah.
Hey, Samantha. Patrick, on a lot of that, I agree with what you're saying, but a lot of that comes back to speed to market. I think that's why the non-admitted have done so well.
Yes.
Is I go to them and say, hey, if you had a water shutoff thing, you guys can give a discount. Okay, we'll do that in a couple of weeks. And literally in 2 weeks they're doing it. Where I go to
it all
Traveler
fits together. Absolutely.
It has to be that speed to market. They're not going to want to spend hundreds of hours to go through this filing and wait, 300 days and they're losing that momentum is the problem. They're hiring attorneys and analytics to where if you came to them and said, give me your things, this is what your discounts are going to be. Awesome. You're good to go. And it's done in 2 weeks, a month, whatever it is. It's that speed to market. Everything is speed to market.
Absolutely.
Everybody would be.
Sorry to interrupt on that, Samantha.
No. Okay. So we've got just a few more minutes and I want to deep dive into some insurance education because, that's right up my alley. I actually sit on the board for the California curriculum with the Department of Insurance. So what do you say about the department and the handling of I know you just recently got your license or have had it for a while. You went through
I passed the exam last fall, right?
Okay, so
just as a way to increase my knowledge. That's exactly right.
Good. I like that. I've had my license for 25 years, which is frightening because, I started when I was 4. However, the process now is they have removed the 40-hour licensing requirement. So now you have to take the 12-hour licensing requirement, which to me, from an educator standpoint, was like, whoa, that to me was interesting that we were only one of the few states that still had that pre-licensing requirement. But there's also a lot of E&O concerns and a lot of agents out there. I mean, I'm boots on the ground. I'm training these folks. So I see what's going on out there. And it's amazing how many people don't know what they're doing, what they're selling, and it's a little bit frightening. So, what type of reforms or you know, rules and regs, do you see the department really honing in on for education and, the continuing education for helping these agents be more educated out there?
I mean, I'll be perfectly honest. I don't have a strong set of views about reform should be done in the actual education. I do think it's very funny to me that I was one of the last people to take the exam when you had to put in those hours. But look, at the same time, I passed the exam on my first go, and I put in about 25 or 30 hours of real time, and then the last 10 hours is sort of like clicking on the mouse to get So okay, fine. Like I don't know what's necessary, but I do think I would say this without question, agents and brokers need to have proper training. I do think that we want to make sure that the training is not a barrier to people entering the business. I don't think that at least the prior system was much of a barrier. I'm sure there are smart changes that could be made to the curriculum to make it more relevant. I did notice that some of the stuff I was learning was very particular, like how many days notice do you need to get? Like, you should know that, but I mean, come on. It's like, are people really
The
going to know?
carrier knows it.
We
Yeah,
know that when we get those letters that our insurance do.
Yeah.
So that stuff is those numbers I think are important. But I think, from like because I am on the board, so I am involved in the education, the curriculum. I mean, they have really gone and done a lot of mandated courses for annuities and long-term care, and even life insurance agents now. They have to do these separate, 8 4-hour courses that count towards their CE, which I think is great. And I'm hoping that maybe the property and casualty side, I know we have homeowners and flood, but maybe there are some more implementations just to make sure that people actually are truly aware of what's going on. One of the things that's a huge problem for us agents is we are the first ones that have to report a loss typically
sure.
to carriers. And that part is, it's the worst time for an insured, but it's the time to show up best for the insured. And that's where we as independents or even, direct writing carrier individuals, that's where we shine. And so a lot of times we find that our carriers unfortunately aren't shining along with us in those
Yeah.
tough moments. And so what do you say to, really helping, have the leadership to support the independent agent in that claims process, and helping those carriers understand like, hey, you got to be responsive and you've got, these things. I know there are rules and regs, but they're not necessarily always implemented on the front lines, unfortunately. So what do you say to that?
Well, I agree. And what I would add to that is this is exactly why I want customers to have a clear, unbiased report card, or no, to have that knowledge ahead of time when they're shopping, when they're renewing from the Department of Insurance. So they understand that there is a difference in how insurance companies behave. And so they have some well-grounded idea of what the Department of Insurance is seeing. Because you agents, you understand this because you're dealing with this all the time. You know that there's a real difference in how carriers can act. But most customers, of course, most of your experience with insurance is paying the bill. And it's only rarely that you actually need the insurance. In fact, generally, you hope you don't need the insurance. And so there's just this real disconnect. And I think it's very important to reconnect that so people are more empowered with that information and understanding. Hopefully that will, if we're able to do that effectively, that then will make your job somewhat easier too, because you'll be dealing with a more informed customer who understands better, what's going on. But look, there's no question, claims are where the rubber hits the road. It's hard, and we need to keep working that. I'm sure it's a never-ending process because ultimately you're asking or demanding a company to pay a lot of money, and if there's not real alignment over what is owed and why, there's going to be friction.
It's always a fun
So,
conversation.
yeah, I have a quick question. So, there's been a lot of talks in the industry about nuclear claims. I know this is getting a little off topic on it, but 75% of all billboards in the country now are owned by attorney firms. You have hedge
Wait, hang on
funds
a second. Is that
financing.
a real statistic?
Yeah, you can look it up.
That's
That's
wild.
extraordinary. You're talking
In
about
fact,
third-party litigation here, right?
yeah. So, hedge funds are financing these attorney firms now. In fact, Samantha and I were on the phone yesterday. I was on the 5 freeway leaving Cerritos, headed back, and I was stopped in dead stop traffic. And I think I read off 9 attorney firms billboards that I could see from my car stopped in the freeway.
Was Sweet James one of them?
It,
Because he's everywhere.
Sweet James was one of them. You know, and I had this long conversation with a number of carrier executive managements. I said, I kind of blame you guys in a way because a number of years back, an attorney would had no grounds for anything, but it was cheaper to just write a check for 25 grand to not litigate it. Then it was cheaper to write 50 grand. Then it was cheaper to write 100 grand. Now it's escalated so far. How do we rein that tiger back into the cage? I mean, I believe that there's just a value for everything that happens. But these nuclear claims where, I got $9 million for a slip and fall case and all I did is I broke my leg. You're like, wow, they're putting this into that jury pool and the jury doesn't understand, who's really paying that. The insurance company's not going to pay it because there's limits. Everybody's got a limit on their policy. And so what do you feel about nuclear claims and how we can rein in, this situation,
Well,
if there's a
well,
possibility for the insurance commissioner to help with that?
yeah, absolutely. So first of all, look, clearly the lawyers are an important part of the process. Like they just are, right? You need to have that legal check and balance in the system. So I think we all agree on that. The question is, how do you get that balance? And I am certainly very well aware that the rise of third-party litigation over the last decade is a very big deal. It's attracted national attention in bipartisan national attention in both administrations. And different states are starting to take a hard look at it. I think for sure California is going to need to take a hard look at it. It's absolutely something that I'm required, that I am not required, that I am committed to looking at and working on. This is something that will take legislative action. This is not something that can be done on a regulatory basis. It's something that's going to need to be worked out through the legislature. I can't tell you that I have like my 10-point plan as to like exactly what needs to be done. I think it's a complicated issue because I do think it's important for claimants to have access to legal relief, right? To be able to hire a lawyer. And so I don't want to restrict the flow of capital in. However, I think a lot of times the way this is done actually ends up benefiting lawyers as opposed to the claimant.
That's what I'm getting at. Yeah.
Oftentimes the claimant ends up getting a check just sort of, and then to just go away, and then the lawyers pump the case up. So you got to get those rules right.
On the other side, from I write commercials, apartment buildings is what I do, and the habitability claims. I mean, in San Francisco, a lot. I mean, these companies were like, "Yo, we're just not writing hab anymore because of these frivolous, insane claims."
And
now
I've heard that too.
Yeah, now they're slowly coming back in, but what for years carriers were just doing, we're like, that's now just an exclusion.
Yeah.
Like
Yeah.
we're not going to cover the lead or the asbestos or the mold.
No, I look,
Or
I
the bed
totally agree
bugs.
with this. I think it's complicated.
Yeah.
Right? I don't think it's easy. I think it requires deep partnership with the Department of Insurance and the legislature, because the Department of Insurance is where the expertise sits to really be able to understand exactly what you were just saying, Samantha, as to like, look, if the market's actually not working that well because we're getting exclusions, because we're getting carriers that won't write, because we're not getting rewards that are actually benefiting the claimants. And then the legislature has the responsibility to write the law. It has to be done legislatively. It can't be done through regulation. So I think it's a hard issue. I absolutely am committed to working on it. We obviously have this immediate crisis in California that kind of needs to be addressed right away. But this is absolutely an important issue I'd want to get to, because you're absolutely right. We've seen a huge rise over the last decade. Many, many states are dealing with this. There was another GAO report on this about a year ago that I read some time ago. Like everybody who's thoughtful agrees that what's happening now is out of whack and it needs to be fixed. I completely agree with that.
It totally does. I feel like we could talk to you all day long, Patrick. Patrick Wolff with 2fs.com is the website where you can learn a little bit more about some of Patrick's ideas and thoughts a lot around many of the different issues we talked about and many others. And it's very well done with the way that you have the questions and then kind of your plan of attack, which I really enjoy. We are going to go ahead and put that in our show notes and also get you out and get this episode out. We say thank you to you, sir, and we can't wait to continue on our conversations over the next few weeks. And just wanted to also put a little disclaimer here. We're not here to endorse or recommend any candidates. We're just really interested in getting out the information to the constituents and to the public about who these incredible people are that are running for the Department of Insurance California Commissioner seat. All right, everybody, thank you so much, and we hope you're kept up to speed.